Good evening, everyone. Welcome to Admiral Markets webinar. My name is Chris. Nenad and myself, we are going to take a look at trading systems and methods based on indicators. So it's going to be an indicator-based trading session. For more regular analysis, as you know, you can find us on Twitter through these handles. First of all, though, before we dive into today's topic, please be aware that the webinar is shown to a global audience, but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, so Nenad and I are looking forward to talking about indicators. As you know, we have a balanced approach towards indicators. A few of them we find useful. If there are too many, the chart starts to look too crowded, so we like to find that balance. Some people are going to be on both extremes, like, I don't know, dozens of indicators, let's say. Some people, nothing at all. They're going to be only looking at price action. For us, price action is definitely very valuable. We look at candlestick patterns as well. We look at the market structure. These are very important elements in our trading, and we do a lot of analysis on that. So when we're talking about basically trading systems based on indicators, you got to keep that in mind. We do like discretionary trading, and we're a big fan of those. And for traders that have joined our webinars, know that. Really important for me is wave analysis, wave patterns, Fibonacci analysis, Fibonacci sequences, and trend lines, and looking basically at the patterns, trying to read the market psychology, try to understand the market structure, see where the decision zones are and where the key levels are, and wait for triggers at those decision zones. Whether it's a breakout, a bounce, I like to do my analysis by looking at support or resistance, trends and momentum, and patterns. And that's how I try to understand and judge the market structure. All right, so with that said, though, there are some great indicators that do, I think, lift up my trading. And I mentioned already a few of them. Trend lines, Fibonacci, for instance, are such examples. But those particular indicators are manually drawn. So those are things we need to put on the charts ourselves. So that's nothing wrong with that. But if you're starting out, or perhaps if you don't want to invest maybe as much time in analysis, then they can basically be a bit more difficult and more time consuming, right? So other indicators make things a bit easier. They are automatically updated, and it just doesn't require that much, maybe as much work. All right, so I'm going to talk about those a bit, and I'm going to talk about two specifically that I use frequently for my trading and I appreciate the most. So with that, of course, we'll be talking about entries, stop losses, targets, but also the management of that trade. So that is it from a presentation point of view. We're going to look at live charts right now. I want to explain it on live charts. If you are interested in these indicators that I'm going to show you, there is a way to get them for free from myself. You just need to send me an email right here already. I have it prepared. Here's my email. Just write me with a short message saying indicator, please send indicators from webinar 26th of January, and I'll send it. All right? So let's get over to the charts. Oh, sorry about that. There we go. All right. Now, there are two moving averages on this chart. These moving averages I use regularly. This is not the main indicator I want to discuss, but it is a custom indicator because it's showing a different color depending on the angle. So you can ask for this one too. I'll send that as well, no problem. Just specify it in the email. You're seeing the awesome oscillator, which is part of the MetaTrader 4. So you can just find that by going to Insert Indicators, go to Bill Williams, click on the awesome oscillator. That's simple. So there's two moving averages, the 8 EMA close and the 144 EMA close. 8 EMA is for impulse, 144 is for the trend. So it's the long term, basically here, the green one indicating uptrend, orange, of course, downtrend, blue indicating bullish momentum, red indicating bearish momentum. Okay, so one more oscillators on this chart. That's the Fisher transform. That is one of my favorite oscillators because it reacts so precisely with price. You know, it's a great method, and I'm going to show you in just a second how I use it. Just want to finish, you know, the summary of the indicators that you see. First of all, one more is the Keltner. This is Admiral Keltner. Admiral Keltner is basically part of the MetaTrader 4 Supreme Edition. You can find that. That you do not have to write me an email. You can just go to admiralmarkets.com, click on Platforms, click on MetaTrader 4 Supreme Edition, and click on the free download. And you will not only have the Keltner bands, but you'll get a whole range of indicators and free tools that help your trading. Pivot points, for instance, is one of them, but there are many more. You can see right here a big list with a lot more. Mini charts, order histories, Renkos, you name it. So a lot of options there. Last but not least is the Fractal, but this is not a typical Fractal. This is not a normal Fractal. This is the Fractal I developed myself. Fractal indicator I made for my own trading. Not myself, I had a programmer do that. I'm not too technical in, in building these things, but I explained my ideas, sent an email, a programmer made it for me, luckily understood what I was talking about, and this is the result. So now the idea behind it is really a trend trading strategy. It is to capture the dips within that trend, and but not the dip of a fib. So typically when you have, of course, a trend, we can put a fib like this, and we can see maybe the retracement and a bounce at one of these fibs, like the 38 or the 50 fib, right? And that could be one way of tackling the market. But the system is not trying to catch the turn. It's the fibs, of course, are trying to catch the exact turn. So you're going to get the earliest and sometimes the best price, but the disadvantage is that price might not turn at that fib. It might not respect it, and it might go through it. So in some cases, you'll be catching a falling knife in a way, figuratively speaking, because the market is somehow not turning at the fib you have. So that's the question of, partly of course with fib experience, but sometimes, you know, it doesn't matter how much fib experience we have, the market doesn't always use the fib we have in mind. The advantage of waiting for reaction is that we see a clear response. All right, so that's one advantage. Now, this system is based on Fractals, and the second system I want to show you is based on a combination of oscillator and Fisher. Before I do that, we're going to start with the Fractal, but it is possible to get all of these indicators. Just send me an email right here to this address, this email address, and write me please though which indicators you're interested in, okay? Because I mentioned a lot of them now, so. All right, so I can even copy this here and paste it. All right, back to the charts. So the fractal is indicating, this custom-made fractal is indicating basically the trend and a correction. The trend is when there's a dark red triangle or dark green triangle. Basically, the fractal indicates the position of the fractal versus price. So if there's a red fractal, that means that price is trending to the downside because the fractal, the support level, is below key moving averages. So that's indicating that there's a downtrend going on. You can see here red fractals. So basically, it's all about that relationship. The green fractal indicates that the top is above key support. All right, so it's pushing basically. When you have circles, that means that is basically consolidation or correction. So when we had, for instance, green fractals here, you see the circles at the bottom, that means we're in uptrend. Circles at the bottom and green triangles at the top is an uptrend. Red triangles at the bottom and circles on top is a downtrend. The whole idea is to wait for triangles to appear. All right, so for instance, here we have a red triangle. Let's zoom in on that one. The moving averages are not necessary, but they just confirm the trend direction. All right, Keltner is not a necessary part as well, but sorry, Keltner is a necessary part. The moving averages are not. That's just for you know, a indication of an extra confirmation of the trend. That's all. So the idea is to wait for a red fractal. That indicates, or green, that indicates the trend. The next step is to wait for the opposite, a circle. The idea behind it, and I need to open my drawing tool here for a second. Hang on, folks. The idea behind it is that we get a trend pullback continuation like this. Follow me. The idea is that here we have a trend. This is the pullback, and we're looking for a continuation. So when we see a fractal and we see the opposite fractal, we're in a spot that entry is near. So it's simple because we're only looking at fractals and we're only waiting for fractals. So you know, that's the easy part. All right. Now the last part is the entry. What I'm looking for is 7 candles not to break this high. All right. When the 7th candle doesn't break the high, the pullback has finished. This pullback is over. So in this case, it happened on this candle right here. All right. So that is the entry. You can count with me. 1, 2, 3, 4, 5, 6, 7. And that is the end of this correction, and we expect a continuation. Sometimes that entry is going to be better than other times. In this case, oh, you don't see a wait. That's so sorry. You see, I clicked on the play button, but somehow it didn't register. Sorry about that. So this is the trend. This is the pullback. I think you missed this, and we're looking for the continuation. So the trend is, and the pullback is easily measured with the fractals. The last step, the continuation part, is a manual measurement of basically the candles. All right. So, and this is something that actually I'm going to make an expert advisor on. So this will become easier as it becomes more automated. It's in production, or it's being made as we speak. So, but for the moment, manually counting 1, 2, 3, 4, 5, 6. I thought 7. Did I count correctly? I think I missed one. Yeah, this is 5. This is the 7th candle. So anyhow, it's very simply counting the candles. This is the 7th. So that's the entry. Now this entry is not particularly great because it's already moved quite far from the top. Okay, so I've seen better. Obviously, what can happen sometimes is price, for instance, moves lower, makes a hook back, and price is still here. Of course, in that case, the reward to risk is a bit better because this is then the risk and the reward part is a lot larger. So, but in any case, the stop loss would go above the previous fractal. And we're looking at a 4-hour chart, so it's a bit wide, but for pound dollar, it's not that bad, about 120 pips. And the max move that it went down after that was about 200. Before I talk about targets, though, I do want to say one thing about the Keltner. The reason why the Keltner is there is for the entry part. The reason why the Keltner is there is that if price on the 7th candle is touching or beyond the Keltner, the setup is invalidated, because in that case, price has gone too far. It's kind of like a warning sign, like, hey, this has continued too much. So basically, the break, pullback, continuation has gone too far. All right, so that's why the Keltner is there. It's part of the MetaTrader 4 Supreme Edition. So we can take a look at another example. Here, for instance, is an example. We see downside fractals. We see the opposite fractal, but 7 candles of right here is touching the Keltner, so it's invalidated. All right. We can take a look at the upside just to switch things around a bit. We don't have an example here. Let's go to a lower time frame. I like to use 1 hour and 4 hour most. I mean, I guess it would be okay on a daily, weekly, but those are just such a large time frames that I don't really trade on that this particular system. But so that remains to be seen. But I would guess that it shouldn't be too much different. On an hourly chart, let's take a look. Here you see, for instance, a green fractal. All right, so we have the uptrend. We have the opposite fractal, but we don't have an entry because 1, 2, 3, 4, these candles already broke through the low. You see that? So this is no 7 candles not breaking this low. Here we have 1, 2, 3, 4, 5, 6, 7. Seventh candle breaks this low. So that's not a setup either, as you see. All right? All right, let's continue. We have a green fractal and another opposite fractal. 1, 2, 3, 4, 5, 6, 7 candles right here. 7th candle after the candle close is not breaking this low. We have an uptrend, green. We have support, check, trend, pullback, continuation. All right, so that is an entry right there, the stop loss. Most of the time I do use the closest fractal and go, depending on the time frame, anywhere between 10 and 25 pips below that. It depends. Sometimes I will use a wider stop loss. If there's a good reason for me, for instance, from a discretionary point of view, if I use this fib, all right, I might go below the 50 fib to give some additional space just in case it hits the 50 and bounces. So there is some discretion there at occasion. In this case, I think it makes sense to go below the 50 fib. In other cases, it might make more sense to use the fractal, especially if there's multiple fractals. In this case, there's only one fractal, so it's less strong. If there are multiple fractals, the stop loss is a bit more risky. Now, that's the entry. That's the stop loss. So we're looking at, the wider one, we're looking at about 65 pips. The tighter one, we're looking at about 35. This is a 1 hour chart, 35 pips. And we get a good entry. Price goes our way for a while, about 90 pips, makes a pullback, doesn't take out our stop loss if we don't trail it, and then makes another surge of, well, several hundred pips, right? So that is a lot there. But there are other entries as well. As you can see, here's a green fractal, and here's a opposite fractal, 7 candles further. That actually hits the Keltner, so that would not count. Let's take a look at this one maybe. This one does count, 7th here. That's the entry, that's the stop loss, and we get an upside. All right. So now I'm going to talk about targets, but I do want to say one thing, is that I do not use this in a machine gun kind of fashion. So I do analyze first. I choose the currency pairs that I'm interested for that day. This is one of the methods I use for entering. It is not something that I use across all time frames nonstop uh, without doing analysis first. All right, so that's something you want to be aware of. That could have impact on the results, maybe not. Let me know what you bump into. If you think it's interesting and you're trying it, I would love to see your feedback. Write me an email. I would like to talk to you about it, and we can crunch the numbers, review how it's going. Is it going well? Could it be better? We'd love to hear that feedback um, about that data that you have. Yeah, it is for free. This indicator, I can send it to you. And in the near future, I'm going to have an EA, and that is going to crunch a lot of numbers in terms of looking at a lot of time frames, and that is going to actually take it without analysis in mind. So in that case, I'm going to have the numbers and see how it performs as a standalone, which I'm not sure yet. That is something I'll know when I have the EA and do the tests. So far, I've just used it as an entry method after I do my analysis. And this indicator, the fractal indicator, you can get if you send me an email. Will this work for Pro real-time? I'm not sure what you mean with, this is a real-time indicator. The only thing you got to be aware of, because it's a fractal, so you got to know the basic of fractals, which is two candles have to close below the low, all right, before the fractal is never going to leave, all right? If there's only one candle, like this, for instance, we have two candles, we have the middle candle, and then we have, again, one candle lower. There, this particular high is not a fractal yet. We need two candles closed on both sides, left and right. Then this becomes a fractal. As soon as they have two candles closed, left and right, this fractal will never ever disappear. It will never repaint. This is it. What you see is what you see. So for instance, here, this candle, once these two candles painted, closed, excuse me, then that fractal was there. You do see color differences between these fractals. You see light and dark green. That does depend on the candle count. I don't have time to go into the details why the circles and the triangles have different colors. That does change, but it's not so relevant. It's a slight difference. Most important is that they're green for this particular time. That's all we need to know. So, all right, that's the fractal. I'm a big fan because I think that the market, it belongs to my belief system because I think the market is fractal of nature. It is repetitive. It is it's not a mathematical object like a square, but rather a flow. It's like a natural object, like the flow of water or a snowflake. So that's why I think the fractal nature of some natural objects we see in real life, it's just valid for the markets as well. That's why I'm such a big fan of Fibonacci sequence levels. I had a webinar on Fibonacci sequence levels as well, and fractals, because I think they're integral part of understanding the market structure. So that's why I'm a big fan of it, because it's simple, but it also is in sync with how I think the market is moving, why it's moving as it does, the behavior behind it, and I think it dissects it so well. Bill Williams chose two. the Fractal 2 based on the commodity market's daily charts. After my testing, I've concluded that for the Forex market, for also lower time frames, like 15-minute, hourly, 4-hour charts, it is better to use a different fractal number. And I use basically 5 to 6, but the entry I do on 7 as an extra confirmation. I think that that has shown, to me, more value than using a fractal of 2. All right. That's that. Then just a few minutes left, so I talked about the Fisher transform. Luckily, I talked about the Fisher transform, this oscillator, already before. But what I like about this particular style is looking for dips. So you can use any other oscillator. I use 2 oscillators. In this case, it's the Awesome, but I guess this shouldn't work too differently for another one as well. But the Fisher, I think, is a very cool one because it reacts so quickly to price. You can see that it's also very accurate. So you got momentum to the downside here, and it shows red. You got momentum to the upside, strong blue. And it reacts so quickly in its changes, right? Here you see already it loses its dark red and thick red and becomes thin red. And it does that so quick. It makes these turns so quick, right? So you can see when potentially the pullback is over. So what I do is I use the Awesome oscillator for trend purposes. So as you can see, the moving averages are confirming a trend. The 8 EMA is above the 144 EMA, but also the Awesome oscillator is above the 0 line. So that's an uptrend. You see that the Fisher is above the 0 line too. So what I need is for this to get oversold within an uptrend. So for instance, here we lose the trend slightly. But here we don't. See, it stays above the 0 line. And at that time, we get a retracement. The Fisher goes down into the opposite territory. The Awesome oscillator stays above. And as soon as that retracement loses its red, it goes from thick red to thin red, like this, right here. That retracement is finished. We still have the uptrend here. So that is the correction. All right, so that is an example right here. This would be the breakout candle. Now, this one is pushing through the Keltner. Okay, that's, this is maybe not a great example, but still you get a follow up here. This is the stop loss. It could be below that candle or below the fractal, and you still get a push forward. Another example could be, let's take a look, maybe in earlier examples to find a good example. Here. This just stays an uptrend still, right here. This turns from thick to thin, and you got an entry there, all right? Now, regarding targets for both of them, by the way, I forgot the fractals, is the fact that, all right, what I use is fibs, basically. So I put a fib from here to here, and I look for minus 272 targets, minus 61.8 targets. Another way would be to look at reward to risk ratios, 1 to 1, 1.5 to 1, 2 to 1. A third way could be to look at confluence of fibs, support or resistance, looking at Keltner, for instance, right? And trail stop basically would be using either using the nearest fractal. So in this case, for instance, let's take a look at the short that we were talking about right in here. This one, the very first example, like this. So if we use the nearest fractal, this would be a point to move the stop loss. This would be a point, and this would be a point, right? So 20 pips above that, for instance, our stop loss would be at 123.06. Price goes to, doesn't hit it. So our stop loss would eventually be here and will get taken out when price makes a retracement here. All right, so we would get something like 105 pips out of that by using the trail of these fractals. So that would be the trail stop loss possibility when using fractals as well to lock in profit. So trail stop could be used like that for both systems. And the target I use, discretion targets like fibs, and you can add reward to risk ratios and Keltners and other confluence tools that you use. All right. So that's it from my side. That's two indicators I think are really very useful. Once again, this transform indicator and the fractal, my own custom-made fractal indicator. So that's my my take for today. Once again, if you are interested, this email address, and I'll send it to you. No problem. And also, of course, the MetaTrader 4 Supreme Edition. You can get that through the website itself very easily, admiralmarkets.com, platforms, MT4 Supreme Edition. So you have all the info right there. That's it from my side. I'm going to pass it over to Nenad. Nenad has some great news he wants to share regarding a nomination, and he's going to share that, I'm sure, right now. So let's see if Nenad's around. Hi, Nenad. Congratulations.
Hi, Chris. Thank you. Actually, this is a great opportunity. We already know about it, but a lot of people still don't know about it. We've been nominated here. You can see Forex Best Awards 2017. So both my and Chris analysis is nominated under the Best Sell Side Analysis Contributor with Admiral Markets, because we are providing the analysis to Forex Street. It has been recognized as one of the best analyses out there, and Admiral Markets has been officially announced as the best sell-side analysis contributor and nominee. Okay, I personally have been nominated in under two categories: best speaker and best video podcast, and this is actually what I've been telling you about U.S. presidential elections 2016 and the impact on Forex and financial markets. So if you follow us, you can, of course, we would appreciate if you vote for us, and let's see if we will get an award. So you can go to About Us, here click on the News tab, and here actually you can fill in Forex Street survey. So this is really a nice opportunity to be a part of best Forex leading website, and they have recognized really the work we do here, so it's very, very appreciated also. So that is what I wanted to tell you. So very good news for us, for the company, and as you always know, you're in safe hands, guys. So I will continue. Thank you, guys. Thank you. I see that some people already voted, but if you have the time, so you can do it easily. It will take like a minute. I mean, it's very, very fast. Okay. Another thing what I wanted to tell you about is Chris already presented you with a great system, with something that he is also paying attention to. You know, basically that I'm a price action trader, and I from time to time I like to see and create those systems that are very good to people who start to trade, who are not that deep into analysis and into price action. So yeah, just by introducing more simplistic approach, we actually want to motivate people to start trading, and over the time they will actually see if they want to trade as a price action traders or trader, or eventually as an indicator trader. But well, I personally know some traders that are solely price action and other traders that are indicator based. You know that we always say there are also good indicator based systems that can make you profits, but those indicator systems should follow some rules. Okay, just because indicator-based systems are different in dimensional approach and time approach than standard price action. If you want to analyze markets, whatever, then you really need to know also about price action. Okay, guys, the thing is, yeah, just before I start, actually, someone is asking me, yeah, to provide a link. Sharat is asking me to provide a link. Yeah, I think I have the link here. So before I continue, I will try to find a link. I mean, it's the link that I presented you here, so it should be easy to access it. But definitely, I will try to pass the. Yeah, I will find the link during this webinar, and I will provide you the link. So let's get back to webinar. So then we will see about the link. So here the thing is, we will talk about classification, examples of good and bad looking charts, balanced approach, and statistical breakdown. So for me, the biggest thing here is just classification of the system. Every good system needs to have one leading indicator, a lagging indicator, dynamic or static pivot point. If a system has much more than this, then usually that system will become cluttered. It will have too many indicators, and it is not that good, guys, okay? Definitely you don't want to see anything that is cluttered, okay? If a chart is cluttered, then the problem might be that you will get lost and you will lose yourself in the analysis. So don't do that. Always follow what price does and follow the indicators if they are a bit more simplistic in their approach. I'm not talking about custom-made indicators. Custom-made indicators are okay as long as they follow the rules. But if you see the chart has tons of different indicators, I personally really don't believe that those kind of charts can make you money, guys. I mean, I've been really a long time in this Forex market to know what works and what is not working. Those kind of systems can work like a month or two. And then suddenly, when a market starts to move fast, you will get a lot of signals and you will definitely get lost. You will be lost totally in those indicators, alerts, signals. You will not know if you should go long or short or what you should do. It's very, very hard. And because of that, you need to classify all these things into a simplistic chart, not cluttering it. There are a lot of indicators. We have moving averages that can serve as dynamic support resistance levels. We can have simple SMA, exponential EMA, smooth EMA, whatever EMA you want, guys. But pick one or two. Don't have like 5 different EMAs. I mean, some people trade with 5 or 10 different EMAs. It's some sort of guppy trading. It can be okay, but usually systems that you will encounter will not be guppy-based systems. They will be some systems that are just, you know, guys, everyone can create a system. Just put a couple of different indicators and you can call it a system, right? It's not like that. When we create a system, we always test it, okay? We always do some testing before that. System needs to be tested also on live account, because demo trading is good. It's great for novice traders. But if you want to provide something to people who want to make money in Forex market or pips, you need to test it also on live account. So everything is costly, right? So when a system is sold for $97 or euros, like most of the systems over there on the internet, I really doubt that system can be that effective. Because guys, in order to make a system, you need to reserve the time, right? You need to actually, time is money, right? So everything is costly. You need to deposit some money on live account to see if the system works. If you lose the money, then you need to work a little bit more on demo. Then when you're sure that it works on demo, then you deposit more money on live and again see if it works on live. For EQ system, it costed us like 2,000 euros. So, you know, everything is costly. You need to pay for indicators. We are not coders. We don't make indicators, but we have people who make indicators for us. So, right, you need to pay them. Everything is costly. So before you assess any system, watch if this is more simplistic approach. See if the system has custom indicators or some standard indicators, and try to see if there is any logic in the system rules. I will show you a system that I haven't created personally, but I have it for a long time. It's in my database. You will see how some interesting system might look like, especially for traders who are novice traders. So when you see all of these indicators in a single system, something is wrong. So I think it should be like couple of EMAs, not 5 different EMAs. Or for me, usually 2 EMAs is enough. They serve as dynamic support and resistance levels. And if you have Bollinger Bands, it also can serve as dynamic support resistance. Instead, you can use static support resistance such as Camarilla or pivot points. It's okay. This is a sort of system that looks good. Now, I'm not talking about if this system is profitable or not. But how it looks, guys, you know, it has an indicator that is based on Uric CCI. It has a CCI colored. It has some arrows that are probably based on some stochastic or MA crosses. So this is entry arrow. Entry is confirmed by this. So you see, it has some logic. So this is a good looking chart, guys. This is not a bad looking chart. So I'm not talking now about profitability, but rather to imply if the chart is good or bad looking. This is a good looking chart. Also, this is a good looking chart too. You have a channel indicator, you have some sort of entry indicator, probably based on the stochastics, okay? You also have a filter EMA, so you see, it looks good, right? So these are just random screenshots from a possible good systems. And I can say that this might look good, really. But the problem is, what if we encounter something that is not looking good? This is also good. Okay, 2 EMAs, okay, a simple MACD, okay, and a static pivot indicator. And watch this, guys. I've been looking these kind of charts for more than 5 years, 6, 7 years. I know about this. Really. I mean, every trader who gets to Forex Factory thinks that the more colorful the chart is, the better it will be. Well, it's usually vice versa. The more colorful the chart is, the worse results it will provide you with. This is bad looking chart, and no one can tell me that money can be made on this. I mean, really, I don't understand what this is. First of all, let's analyze this bad looking chart. You have, this is parabolic SAR or PSAR. Usually this serves as an entry or stop loss indicator. You have MACD, one line. Then you have RSI, okay, this is lagging, this is leading indicator. Then you have ADX that is lagging indicator. Also not sure why this is put on this chart, what the rules are. And you have another MACD that is just, I mean, this is different color than this, but essentially this is the same, right? Guys, this is pure nonsense, if you ask me. I am not talking that the creator of this chart, maybe he does know something about trading or something about price action, but really looking at charts like this makes me sick, because newbie traders will fall in a trap of thinking that the colorful chart will really make them huge profits. I mean, this is wrong, guys. This is Really bad. You cannot do anything. I mean, what would you do? What are the rules for this? If every line is above zero line, you go long. If everything is below zero line, you go short. No, this is stupid. Watch this. Watch this, guys, here. When you see this, okay, when you see this, this is the time when charts like this will kill your account. Because usually these kind of systems, when market is ranging, they will lose you money. The biggest thing is when trend is happening, a strong trend. Guys, when there is a big trend, you don't need these kind of charts to make money. Everyone can make money when a trend is going good, right? But when there is an end of the trend, when there is a ranging market, when price is waiting for something, then that's a problem for these kind of systems. They will generate a lot of different signals during this time, so you don't know, should you go short or should you go long? Opening random trades, going long, going short, going long, going short, will get you nowhere. This is how money is lost, okay? Also this, guys, this is how money is lost, okay? You can see a lot of different things here, and the biggest thing is, will you understand the principle, the basic premises on chart like this, really? That can also be a big problem for traders who are not into trading. I personally can understand a bit of logic behind every system. But when I see systems like this, I just shy away. I really don't care about what it says or about what it wants to explain. This is the example of a good looking chart and a chart that can bring you some logic in it. As I say, I'm not a creator of this system, but the main thing here, it has some indicators that are very simplistic on its approach, and it can still be used for traders with make money. Of course, for traders who want to trade with indicators. Well, let's get back to this system now, okay? Okay, this one. You have EMAs. In order to have EMAs, first you need to have some logic. Why you should place EMAs? Why there should be on the chart? Then you have stochastic here. Okay. It's a leading indicator. Usually it's an entry indicator. You have MACD. I don't see any logic. Why would MACD be here if you have a force index and you confirm your entries with stochastic indicator? Usually the best performing indicator will give you the signal. So the worst performing indicator cannot filter out the signal because it's already been filtered by the best performing indicator. So see the logic. There is no logic in placing two leading, two lagging indicators, because it will be always like one is lagging, one is leading, and they negate each other. So you will either miss good setups or you will be entering too late. That is the main problem that those marketeers probably figured out some 5-6 years ago. So today there is really a less demand for those kind of systems than it was like 7-8 years ago. Force index. I mean, really, I don't understand a point. These EMAs here are probably for the trend. Stochastic is for entry. Force index. I'm not clear why would a creator of this chart or system would place a force index here. Probably he thinks that if the price is spiking from these EMAs and it's going up, he should go up. But then again, guys, what when this happens? When these things happen, it's called whipsaw, traders will get a false signal and they will lose money. That's why we can try to see what happens with envelope channel trading. We have an envelope indicator that will move with the price. So the word repainting is not a good word for envelope indicators or regression-based indicators like center of gravity. I mean, guys, center of gravity indicator is a regression indicator. It's regression channel, simply modified to have a fancy name, center of gravity. It's an envelope. It's nothing more than a regression channel. So we can say that envelopes, they don't repaint, but they actually move with the price. So they are actually indicators that follow the price. They're adjusted. And some people will say they're repainting. They're actually adjusted because they cannot give you the prediction, the right prediction. They just can adjust in the past. But you, when you watch it in now moment, that is what you should take, what you should pay attention to. Now moment. It's very hard to do back testing with indicators such as envelopes, regression channels, and COG because, as I said, they're adjusting their past. So you might get some perfect signals. But in now moment, it's different. Those are dynamic support and resistance levels that actually follow the price. Then you have an interim support and resistance indicator. You have entry signal, and you have trend direction. Everything is incorporated here. So for traders to actually start looking at it, they might be thinking about this trading method. This is actually a method that it's called envelope. And if you want a template, guys, of course, I can send it to you. So you will see actually what it does. I can explain the rules. I mean, the rules are very simplistic in their approach. First, you need to see the touch, or at least very close candle peak, very close to this envelope. So the candle should be very close to the envelope or touching it. After that, you should see an arrow. And after that is confirmed, you will see a red dot. It means that interim resistance is established. This is, by this system, this is a good entry, okay? But here you also need to wait for additional filter, trend bars. Okay, see here, trend bars. So in order, guys, for this system to be much better, we need to remove this. So that is what I was telling you. Because trend is established by envelopes. You need to zoom out and see the angle of envelope. If you see that the envelopes are going down, it's a downtrend. If you see that envelopes are going up, it's uptrend. And soon as they start going down, it's downtrend. Here, it's obviously uptrend. This is ranging market, more or less. So you don't need too many filters. Now this system looks much better, guys. Now this is not per original rules. This is my modification here. So you see, when price gets down, okay, it's already, you see, it fell too much. But here actually touched this envelope, and it started to make some U-turn from the bottom. It went up, up, and up. Here, the trend has been established. You have a drop here, you have an arrow here, interim support has been established, and the price is going up. Here, the price is going down. It's always best to see when price breaks or touches envelopes, and then you get a signal, like here. That means that the price has already gotten below or above extremes, and it's likely to reverse. Okay? So the logic here is pretty much simple. You need to wait for a let's say, candle proximity to its interim resistance or support, wait for the arrow, and after the arrow has been printed out, you enter the market. Usually after it, the dot will follow. I was watching this system at 4-hour time frame, so I advise you to start at 4-hour time frame and see how it behaves. So 4-hour time frame could be okay. So as I say, the best is to see that the price breaks through, then prints an arrow, and you see when it gets, usually this is a sign of being bought. This is, guys, but you need to watch for trend. So if you see the envelopes is going up, your trend trades are always buying on dips. This could be a counter trend entry, because this is still, guys, you see the angle here. It's still uptrend, but if you sell here, this will be a counter trend move. So it will not be as strong as its trend move. So for novice traders, I would advise you to try to follow only trend-based entries. For people who are more experienced, you can try to trade on counter-trend entries. For example, pound-dollar. You see today, pound-dollar. It's obviously an uptrend, but not today, but for a couple of days, a week. It's an uptrend. From 16th of January, it started an uptrend. So when would we buy, let's say, pound-dollar based on the rules? Well, the best entry would be if the price went here. But because, guys, you see, sometimes during a strong trend, you will see this. You might consider another long entry after a pullback of the price and another arrow appears. But you should never buy close to resistance. So it should go here, or eventually there you can go up. But if this is a counter trend trade, so after this was 70 pip movement to the counter trend side. So you see, you might experiment with this. This is strictly trend-based entry. Here, downtrend started. You see, there was a pullback. Okay, down move. This was not a good pullback, so I would probably ignore this, although they were good. But this is okay, entry here. This is okay, entry here. And this is when trend has changed. So pay attention to this. Stop losses are obviously for stop loss. It should be 10 pips above the resistance. For sell trade, for buy trade, it's 10 pips below support. For interim support and resistance. So this is, guys, interim support. This is interim resistance. Support, resistance. So always place 10 pips. The settings here are, I think it's default settings. It's 0 and 0.5. You see, this is actually a custom indicator. So I will send you the template. You just need to email me. My email is torrentialfx@gmail.com. Okay, so try to use, mostly try to use euro pairs and pairs that are actually majors. You can use euro dollar, pound dollar, dollar yen, dollar CAD, Australian dollar, euro yen, pound yen, but also experiment with pound, New Zealand, euro, GBP, see how it goes. So I advise euro, dollar, and yen pairs. So guys, if you're interested, of course, in template, send me an email and I will send you the template. This webinar is recorded, it will be uploaded. And again, guys, reminder that you can actually vote. If you need, of course, any help, you can always ask us for help, and know that we really appreciate your support, and definitely we are glad that we have you here trading and following us. Okay, so thank you, guys. And the last question was, can you use this scalping? I haven't used this with scalping, this method. So the method was purely used 4-hour time frame. So you can actually use it on 4-hour. I haven't tested it with scalping. Okay. So guys, I will answer your question on next webinar. We are already over the time. Thank you for listening and expect new analysis tomorrow, guys. Thank you for listening and talk to you soon. Cheers, everyone. Trade safe.